Hello and welcome to Donut Investment. This analysis is for Sterling Infrastructure on NASDAQ as of 12th of July 2026 with a share price of $682. The full report is on donutchin.ca and Vine, an elite infrastructure contractor riding the data center build. But after a round trip to $1,000 and back, it still trades near 61 times earnings, well above what the growth warrants. A hold, wait for a real pullback. Quality scores 86. Sterling earns returns on capital near 26%, carries net cash, and sits on a backlog up 78% year on year, more than 3 times its annual burn. Its e-infrastructure arm does the ground and site work behind data centers, so it is a genuine picks and shovels winner of the computing build-out. On the business alone, this is one of the higher quality names we have looked at. The reservation is not the company, it is what you pay to own it today. Valuation scores 26. On clean earnings, the shares trade near 61 times, about 2.5 times the multiple its rate and growth backdrop actually warrants, and above the average analyst target. That trips our valuation ceiling gate, which caps the signal at hold no matter how strong the business. The point is not that Sterling is a bad company, it plainly is not, but that the price already banks years of perfect delivery. Our base case sits around $560 below today's price, which tells you the market has run ahead of the fundamentals. The underlying driver scores 78. The data center and infrastructure spending cycle is a real, durable tailwind, and the wider economy favors industrials over the long run. But timing is weak at 42. The shares are below their 50-day average, with momentum rolling over after a 30% drop from the peak, and none of our entry conditions is met. So this is a name to keep on the watch list and buy on a genuine pullback into the low 600s or below, not to chase here. Now, the other side of the ledger. Approximately 61 times earnings, years of perfect delivery priced in. Base case approximately $560, about 18% below today. Bear case $400, roughly 41% downside. Backlog more than 90% data center. Customer concentration. Now weigh the risk against the reward. The bull case is roughly 32% above today, the base case, the most likely, about 18%, and the bear case, a fall of about 41%. So you are risking about 41 to make 32. So, our call on Sterling Infrastructure on NASDAQ, hold. Remember, this is for education, not financial advice. Always do your own research. This analysis is by Donut Investment at donutchin.ca. The link to the full report is in the notes below. Have a great day.